Hey guys, it's Megan, your transparent realtor, and I'm here with Casey Whealton from American Security Mortgage. And we're going to be doing a 4-part series of your basic questions when it comes to purchasing a house and from the lending perspective. So Casey and I have worked together for multiple years on multiple transactions. She is a wonderful wealth of knowledge, and I trust her with my clients because I know that she's going to take care of my clients the way I would want my family members to be taken care of. So Casey, why don't you tell us a little bit about yourself?
Sure. Thanks, Megan.
Yeah, you're
And
welcome.
also, I absolutely love working with you
Oh, thanks.
as well. Yeah, for the same reason. I'm a mortgage loan officer. I've grown up in Fayetteville, North Carolina, and my whole career's been here. I've been doing this for 18 years, and I love this job. I love helping people find ways into home ownership, and I love working with agents like Megan.
And that transpires, the love of her job transpires into her ability to find a way to yes for her clients always. Like she will work her butt off to help you achieve your goal, which is what anybody ever asks for when you have an advocate and somebody in your corner. So that's another reason why I always like working with you. You're welcome. You're welcome. So today we're going to go over some basic questions. Like I said, we're going to go over 4 different videos. Today is going to be lending and credit 101. So this is for our first time home buyers, or even if you're a 6-time home buyer and you're like, I have no idea what my credit score means. Does it hurt for the loan officer to pull my credit? We're going to answer all of those questions for you today. Okay. So Casey, one of the main questions that I get for people when they are weary about meeting with a loan officer is the credit application going to hurt their credit score?
Yeah. So first off, whenever you have credit extended to you, at some point credit's going to have to be pulled. A hard credit inquiry is going to happen. But you can always ask if it's possible to have a soft inquiry. There's a difference between the two. A soft credit pull is not going to result in an inquiry that impacts your credit. So if you just want to kind of ease into it and see, you can start with a soft credit check in many cases. And so then that helps you to know, if you need to have additional work done before you commit to that hard credit pull.
Wonderful, wonderful. I encourage always my buyers to explore, whether it be agents, lenders, houses, options. Is there a negative to them shopping lenders and possibly hurting their credit score on that aspect?
So actually, you're protected in terms of being able to shop around, but you have to do it within a particular window of time. So to be completely sure you're within that window, I would say shoot for a 2-week time frame. So from the start point, the very first time your hard credit gets pulled, and then everyone else you're checking with, if you do it within 2 weeks, you're solid. In some cases, it could be as many as 30 days. But I would say if you want to play it completely safe, try to get it done within 2 weeks.
Good to know. So if you're shopping for creditors or loan officers, a 2-week time frame is to stay safe within, so it's not going to be derogatory on your credit.
Yep.
I love that. Okay, 2-week rule. So I always get this question a lot, is what credit score do I have to buy a house?
Yeah, well, there's actually just been some recent news,
Yes.
news of certain loan types taking away a technical credit score when you're running the underwriting. That does not mean that credit doesn't matter anymore. So when we're looking at a file, when we're thinking about, extending a mortgage to someone, you're looking at it holistically. You're looking at credit, you're looking at how much debt does the person have, you're looking at how much do they have in savings. But there are programs out there that are designed to open up home ownership for folks that don't have perfect credit, right? So like FHA is a great one that has a 580 minimum credit score. VA loans tend to be more lenient when it comes to credit requirements. So I would say don't be afraid to talk to a mortgage professional, because if you're working with someone that wants to have a relationship with you and help you get there, even if your credit needs work, they're going to give you suggestions for how to get there.
And I'm so glad. That's a great segue. I would say it's about a 50-50, where I have buyers who are ready to go. Their credit file's great. They need no work. And then the other half of the time, there's either student loans, they went through a tough time financially, and they do need a little bit of work to get their file to where both the mortgage professional and the buyer feel comfortable with proceeding with the purchase. And one thing I really love about Casey is she takes the time to sit down with people who are in that position where they're not quite ready credit file wise, and she gives them literally a plan, a no cost, no obligation plan. That's the value she provides. She says, hey, here's where you are. Here are the accounts that you need to take care of to get to your goal. And if as fast or as slow as you take care of those without inquiring new credit derogatory marks, we can get you here by this date. And that's all dependent on how fast the consumer is able to take care of it. And that's, like I said, that's another reason why I love working with Casey, is because it's not the best news to know, hey, I don't have the credit file to be able to buy a house right now. That's a hard thing to have to tell somebody. But Casey does it with grace and with compassion. And then she always brings a solution to the story, so that way people don't feel completely defeated at the end of the conversation with her. And if you have a loan officer that makes you feel that way, you should probably shop around. I'm just saying.
Agreed.
Yeah.
One more thing I'll mention,
yes,
too,
ma'am.
since we're talking about that, is part of the reason why I prefer to give folks a credit plan is because in my 18 years, I have not ever found a credit repair company that I trust and have positive feedback on, where I would say, hey, I'm going to hand off my client to this company. You know, these companies that charge people for their services. What I find more often than not is that folks get into these, plans, and they're spending money for companies to just dispute things, and just because you dispute something, it's not going to come off your credit. It
Right.
just ends up, the creditor responds back and says, no, we think it's this, and then you just end up with something that's a dispute, which actually can be an issue for your mortgage to have an open dispute. So that's part of also why I like to provide people with something that's free. Why not take that information and do something with it yourself?
Empower them.
Right.
Yeah. So credit is kind of inevitable, especially because, let's be honest, who has $300,000 in their bank account to buy a house? I would say that is the exception, not the rule. There are people out there who have the cash because they've saved up, they've got an inheritance, or they've sold a property and then they have the capital. But Casey, correct me if I'm wrong, that's the exception. The rule typically is people need to borrow in order to buy a house, right? Okay, so knowing that information, how can consumers, whether it be first-time home buyers who are building their credit, or people who really haven't been taught, how can consumers use their credit to their advantage and also to be helpful and not hurtful?
So a lot of folks are worried or nervous about using credit. Mm-hmm. Either they've heard things, or they've had a bad experience, or they just don't know, right? But you have to have some credit, and actually having more credit can open up better loan options if you have, say, 2 lines of credit open versus, say, just 1. Sometimes people come to me and they just say, I don't like using credit. I don't want to overextend myself. And so educating them on saying, hey, look, if you use this credit card in a very strategic way, you're going to want to utilize it maybe once every 30 to 60 days for a small purchase, something you would already be getting, right?
Like gas.
Right, like a tank of gas, right? And then just pay it off immediately. You don't have to carry over interest, right? Just pay it off, and then that way you're on the grid. You've got a low balance. What's really important is that you want to have credit available, right? So that single credit card can make a huge difference in your score. If you've got a $300 limit and your balance on that card is $300, your score's coming down. Mm-hmm. If you've got a $25 or $30 limit on that card, your score goes up. It happens that quick. Mm-hmm. So utilizing credit. And then another thing about credit is having credit cards, or what we call open-ended credit, is actually a great advantage, because when you think about credit like a pie chart, okay, and one of those slices of pie is how long have your accounts been open. Mm-hmm. So open-ended credit, that card can be open for years and years and years versus, say, a car loan that's going to have an end date. That's a reason why the people's scores sometimes go down when they pay a car off, and they're surprised. Because now an account that they had that maybe had 5 years on it is gone, right? So it's important to get over that fear, but I think the first step in getting over the fear is, as you said, empowering yourself with the knowledge, understanding exactly how to use it, and then sticking with the plan, because you don't want to be overextended.
Correct. I love that. Going back to the point of people being either scared to use credit or they don't want to because they want to maintain a low to no credit history because they want to request manual underwriting for a house. What are the pros and cons of doing that for a consumer, as far as no credit, but I want manual underwriting, or they have a solid credit history, or maybe even have some bumps and bruises along the way, but they have more of a credit history, and what that could look like for their borrowing power?
So a manual underwrite is what we do when someone falls outside of the standard guidelines for a loan approval. Okay, so it's kind of like the exception territory,
Okay.
right? And so what happens when you fall into that exception territory, it means that there are what we call additional overlays, right? So that's going to mean, for example, if we're saying, hey, buyer, you have lower credit than what is typically approved. However, you have compensating factors, so we're going to, we can make this loan to you, but we're going to limit your debt to income ratio. In other words, instead of being approved for a higher amount, you're going to be limited because the lender's looking at the risk involved, right? And it's a riskier loan from the lender's perspective.
Understood.
Right? So in that case, they're going to say, hey, to compensate for that, you're going to be approved for less, right? Okay. And in some cases, maybe the need is urgent and the person's like, hey, I'm willing to take it. It also means that your interest rate's probably going to be higher as well.
Didn't know that. Okay.
Right? So you're coupling.
Because they're more of a risk, right?
Right,
Yeah.
exactly. So you're looking at trying to make sure that they're offsetting the risk that they're taking to make the loan. So higher interest rates, lower pre-approval amounts is typically what goes along with a manual underwrite, and additional requirements from you, right? Verification of rent, things like that. On the flip side, if you take the time to get your credit into a healthy place, that means you're going to have more options on the table. So there's going to be more products available to them, generally speaking, right? So, for example, we've got this incredible program right now where there's, just down payment assistance, 100% financing with no PMI. It's for folks that don't own a home at the time of closing, but some really incredible advantages. But for some of those programs, they require that you have at least 2 open accounts that have on-time payment history for 12 months.
Okay.
Right? So they're very specific about, credit-wise, what they want to see to be able to make that loan. But as far as the financial advantages, it's an amazing products, right? So they're going to end up with the lowest possible payment and less money out of pocket if they've done these things. So that's typically what you can see, right?
Yeah, that makes sense.
Doesn't mean no, it
Correct.
just means that you're not going to have everything available to you, if you're able to take the time to get your credit in a good place.
That's interesting, because I didn't even think about the higher interest rate, because the people that I typically encounter that don't have the credit have followed a certain methodology where they do all of their transactions or most of their transactions in cash, and so they don't realize that actually could be derogatory when they go to purchase a house, what could actually cost them thousands of dollars throughout the course of their owning their home. Because they just decided not to get a credit card that could help show on-time payments for 2 years.
Right.
That's crazy. Oh, good. Look, I learned something new today. Awesome. Okay, Casey, I appreciate you educating everybody on Credits and Lending 101. I hope that this information has been valuable to you guys. My goal in all of this is to remove the mystery of purchasing a house, and purchasing a house goes along with borrowing money, right? So I hope that this removed some of the mystery for my first-time home buyers or my six-time home buyers who really didn't know, and allows you to be empowered and informed making your future decisions. So if you have any specific questions about your particular situation, please reach out to myself. Of course, I'm going to pass you over to Casey because she's the best source of information. But always, please feel free to ask. And if you have any questions that you would like addressed in a future video, please comment below. I'm always open to feedback so I can be providing content and information that people are actually interested in. And of course, if you like this content and you find it useful and helpful, please like, share, and subscribe my content. It means the world to me. And again, this is Megan Schoaf, your Transparent Realtor with Casey Whealton. Real estate, real talk, transparent guidance. Until next time, guys.